Let me ask you a question. When do you pay taxes? If your answer is while filing the ITR, then you might be in for a surprise. And you are not alone. This is a common misconception. 90% of the people around me do not quite catch the difference between tax filing and tax payment. In fact, most believe that paying taxes is once a year task to be handled at the end of financial year. But that's not entirely true. In reality, you are supposed to pay taxes as and when you earn any income. It's not a one-time annual ritual, it's more like a continuous process. And if you neglect the tax man, you might find yourself facing interest penalties. Now, if you haven't been able to figure out what I'm talking about, it's advanced taxes. Hello, I'm Vishvajit Sonagara, founder of Quico, India's leading tax filing platform. And in today's video, I'll help you understand everything about advanced taxes. We will learn what is advanced tax, when is it applicable, myths about advanced taxes, how to calculate advanced tax liability, penalty on late payment of advanced taxes, and lastly, how to pay advanced tax online. But before we dive in, hit that subscribe button and notification bell so you never miss out on any of our upcoming videos. Without any further ado, let's get started. Imagine you have a total tax liability of 2 lakhs in a particular financial year. What would you prefer? Paying it all at once or paying it in installments? Of course, installments, right? That's exactly the concept behind advanced tax. It is that proactive approach that allows you to estimate your tax and pay it over 4 installments. It is also helpful for the government as it ensures a smooth and constant flow of income throughout the year. Now, since it is supposed to be paid in the same year the income is received, advanced tax is also known as pay-as-you-earn tax. So does everyone have to pay advanced tax? Not exactly. But whether they realize it or not, many people do have an advanced tax liability. Let's understand how. Advanced tax is applicable to individuals and businesses whose estimated tax liability for the given financial year exceeds a certain threshold. As per Section 208 of the Income Tax Act, advanced tax is obligatory for individuals whose estimated tax liability for the financial year amounts to 10,000 or higher. However, there is an exception in case of senior citizens. Individuals aged 60 years or above who do not have any income from business or profession are exempt from paying advanced tax. So let's say if a senior citizen earns income from sources such as rental income, interest from bank deposits, pensions, or dividends, he or she would not be liable to pay any advance tax. Now let us understand the due date for paying advance tax. As I had mentioned at the beginning of this video, advance tax has to be estimated and paid in 4 installments. Look at this table. Each of these installments is calculated across the financial year starting from Q1 to Q4. The first installment, that is 15% of the total advance tax, should be paid by 15th of June. The payment of the second installment, or 45% of the tax, should be paid by 15th of September. The third installment, which is 75%, by 15th of December. And the remaining amount, or 100% of the advance tax, should be paid on or before 15th of March. So suppose your total advance tax liability is 100 rupees, you need to pay 15 rupees by 15 June, next 30 rupees by 15 September, another 30 rupees by 15 December, and the remaining 25 rupees by 15th March. However, keep in mind that businesses and professionals who have opted for presumptive taxation scheme under 44AD or 44ADA can pay the entire advance tax in a single installment on or before March 15th without any penalties. Now let me bust a few myths due to which people end up not paying advance tax and as a result have to pay interest penalties. So let's understand them one by one. Myth number 1. Salaried individuals don't have to pay advance taxes. Most salaried individuals assume that advance taxes aren't applicable to them since their employers already deduct TDS from their salaries and forward it to the government. Well, that's true if your only source of income is salary. But if you have additional income, like rental income, or receiving dividends, commissions, interest, or capital gains, which a lot of people do by the way these days, it's likely you have an advance tax liability. Another classic example in the case of salaried individuals is when they switch jobs. For instance, Aman has recently moved from company A to company B. He earned 6 lakhs from company A and he'll earn another 7 lakhs from company B in the remaining part of the financial year. Aman opts for new regime and hence both the companies will not deduct any TDS from his salary, assuming that Aman's income is not falling in the taxable range. But effectively, Aman's total income is 13 lakhs and hence he must pay income tax on the same. He has two options. Either report his income from company A to company B so that they can deduct appropriate TDS, or he will have to calculate and pay the advance taxes himself. Myth number 2. Traders and investors can pay advance tax at the end of financial year. Most traders and investors don't know how to calculate their advance tax liability in the first place. And they also assume that they will wait for the financial year to end, see if they make profit or loss, and then pay taxes. But that's not how it works. Advance taxes have to be paid on quarterly basis. Now there's a bit of nuance depending on whether you are an investor or a trader. Since profits from F&O and intraday are considered business income, traders will have to estimate their profits for the entire financial year and pay the applicable advance taxes as per the 4 installments. Now if at the end of the financial year you have calculated and paid additional taxes, or you make net losses from all your trades, you can always claim a refund while filing the ITR. The same process can be followed by investors as well, who have earned capital gains from their investments. However, because it is not possible to accurately predict the amount of capital gains in advance, the government allows you to pay advance tax on capital gains on an accrual basis. This means that instead of assuming and estimating your capital gains for the entire year, you can calculate them on quarterly basis. For instance, if you earn 100 rupees in capital gains in Q1, you can simply pay 15% advance tax on those gains. And then in the second quarter, if you earn another 50 rupees in capital gains, you will have to pay 45% advance tax on the total accrued capital gains of 150 rupees. I hope that was clear. If you have any doubts, let us know in the comment section below and we'll be happy to answer them all. Moving on to myth number 3. Businesses and professionals can pay entire advance tax at once by 15th March. This is partly true. As I had mentioned earlier, businesses and professionals filing income tax returns under the presumptive taxation scheme are allowed to pay the entire advance tax in single installment on or before 15th March. But those who haven't opted for presumptive taxation scheme will have to pay advance tax as per the defined timelines, or else they might have to pay an interest penalty. If you don't know what's the presumptive taxation scheme and want to know more about it, type presumptive taxation scheme in the comments below and we'll make a separate video on that topic. Now, before you decide to pay advance tax, you will have to first calculate it. Let's understand this. Calculating advance tax liability yourself can be a tedious job. Hence, we have made an advance tax calculator to make this process simple and seamless for you. Simply go to Quicko's Advanced Tax Calculator and enter your age and residential status. Enter your income details from various heads such as salary income, house property, quarter-wise capital gains, business income, and income from other sources. Now enter the details of any tax-saving investments that you have made, like ELSS, PPF, NPS, and donations, etc. can be claimed to reduce your taxable income. Lastly, enter the amount of TDS, TCS, or advance taxes that you have paid. That's it. Depending on the regime you choose, it will calculate your advance tax liability for the entire financial year and also tell you how much amount is due in the upcoming installment. If you want to calculate your advance tax liability, you can check the link to the calculator in the description below. Okay? Now let's move on to the next segment. See, timely payment of advance tax is crucial and non-compliance can come with additional costs. If you fail to pay advance tax on time, a simple interest of 1% per month on the outstanding amount is applicable under Section 234B and 234C. So if you want to avoid unnecessary penalty, make sure to pay your advance taxes on time. But how to pay advance tax? Let's understand. While you have the option to pay advance tax both offline and online, we'll cover how to pay advance taxes online. Let's understand step by step. Step 1. Visit the e-filing portal of the Income Tax Department and click on the e-pay tax option. Step 2. Enter your PAN on this page and re-enter to confirm it. Then enter your mobile number and click on continue. Step 3. Now enter the 6-digit OTP received on your mobile number and continue. Step 4. Click continue to proceed further. Step 5. Click on proceed under the first box labeled as income tax. Step 6. Select the assessment year as 2024-25, type of payment as advance tax and click on continue. Step 7. Enter all the tax details and click on continue. Step 8. Select a suitable payment method and press continue. If you want to pay through UPI, you need to select payment gateway including UPI option. Step 9. Preview the details on the next screen, and if everything looks fine, click on pay now. Once payment is complete, you will get an acknowledgement on the next screen. Save a copy of this tax receipt for further reference as you will need it while filing your ITR. So that's it for this video. If you have any doubts or questions, shoot them in the comments and we'll be happy to answer them. If you found this video helpful, make sure to hit the like button and subscribe for more tax related content. Until next time, this is Vishvajit signing off.